Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Wednesday, December the 10th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Charts by TrendSpider and Gamma Flows by Mentor Q. TrendSpider's got a pre-holiday sale going. Some really good prices. Just check them out. Just go to trendspider.com and just check it out if you're interested. It's a great event. Okay, let's start with taking a look at the E-mini S&P on the 4-hour chart. Remember, what we want to see is trend continuation, and 2 days ago it broke. So now the question is, based on what we did yesterday, what are the possible things next? And so here's what we'll stare down. We'll stare down a support floor that's around 68.34. Remember, FOMC day. So markets are going to be choppy and volume is going to be thin. The announcement, 2 o'clock, everybody knows what that is. I mean, unless you're living under a rock. And then the press conference, which begins at 2:30 Eastern, going to be one of the most important things that we will look at. Okay, so staring this down, we can see that we've got a floor at 68.34 from the price action, okay? If we lose this and we bounce and get back up above 68.34, that would be your traditional look below and fail, and it gives you a long to the top of the box. Right now, that is what the trade is implying. That being said, if it loses the floor because of the employment number, what number is this? Employment cost index, whatever that is. If it loses the floor there, don't hold on to the trade because after the dip down, it's the 0 DTE put wall, right? And that number is 6,800. 0 DTE call wall, 6,900, and the big floors and ceilings remain the same. The big call wall, 7,000. The big put wall, 6,700. So price action has just chopped around for a couple of weeks with no real motion per se. It's very, very sideways. And so when it's very sideways, you look for big spikes to short and big fades to go long. We've had fairly big fades, okay? But if we take a look at how yesterday's price action went, we were literally in a sideways box. This morning, we are finally breaking down outside of that prior day's congestion, right? The prior day's motion. They tried to hold it in the overnight and could not. We are also in the midst of rollover, and that means we are moving from the December contract to the March contract, and that's going to make things a little bit sticky. But you can see the box right here. If you take the long, and we cannot get back up over the VWAP, let's say you take the long at 68.35, and it cannot get above 68.45, we've got ourselves more downside flow. And right now, we do have high, low, lower high, higher low, and then lower high again, and we just took a lower low by a tick, but we're caught in the box. We also have 2 cross currents. Okay, very messy price action. But the song remains the same. Above 6,834, pullbacks will give us buy zones into resistance, and that resistance very likely to be the high volume node area at 68.55. That's where we spent hours and hours and hours and hours yesterday. All right, so if we break above 68.60, easily 68.75 to 68.80 would be the next upshot, and then at 68.90, and as I mentioned, 6,900 is where the call wall is. Okay? Trending, look at the formations. Up, down, look for where inventory stops being transacted. That tells you it's a space for a trade event, right? We don't know about the continuation of that event, but we know it's going to be a significant trade event. All right, keep your eye on that. Sideways formations, thin volume. I think it's a pretty big mess. All right, taking a look at the 4-hour. Trend, still important, still upside, but now sideways. We're breaking the trend by time and not price. What does that mean? It's holding a floor, but not advancing higher. The 0 DTE call wall for the NQ is 25,840. The 0 DTE put wall is 25,500. The deep put support, 25,000. The big call resistance, 26,000. What are the traders going to do? You know what? It looks pretty sideways to me. So that would be, I could easily see a dip that would come into a deeper support floor where the 0 DTE put wall is. Let's take a look at the 30-minute chart, right? We had a trend line break night before last, and then yesterday, just so long as we stayed underneath 25,200 and 25,728, we had downward flow. This is a very big sideways patch to me. We can see that we're being bounded by general walls. We've got some upshot here. So I don't want to say, hey, longs aren't viable at all. But it's much better to go where we see all of the price action transacting at a clean spot. And that looks like 25,564 on the floor, 25,740 on the ceiling. And then if it breaks out from there, you know, Bob's your uncle. I think it's very, very messy today. And we really don't have trend. Look at the slope of the VWAP. It's very sideways, very, very sideways. Momentum events, very sideways, and literally no exceptional volume yesterday. Nothing to speak of. Okay, let's take a look at Bitcoin. Bitcoin, wait, did I move to the, let's see. All right, so this is the Jan contract, but let's use this one because they show up differently. All right, so let's take a look. Downward flow. However, particularly yesterday, we had a great big rise, and that pulled up a ton of the ETFs. I'm not sure what the news was, but if we take a look at the trend, I mean, it did come right into resistance at 95,000. Excuse me. Yeah, right around 95,000. Where's the top edge? Came into the call wall and then broke down just by a little bit. But now the new high is 94,000. That's the new resistance edge, 94,500. What did we do? If we measure the high of the move from yesterday to the low of the move, you can see we're battling right at around the 50% mark. So what does that mean? Well, my suspicion is that it means if we can recapture 93,000, that's where the put wall is. If we can recapture 93,000, we've got ourselves upward flow back into 94,500. This is telling us that we've got some sort of momentum drift to the upside, but the volatility is still quite spectacular, right? If I were choosing to trade Bitcoin today, I would simply wait for it to come down into my heavy congestion areas and then take the trade. So potentially 90 is a great place. If you want to take old resistance, new support as the potential trade, you can. Your risk event is going to be at this region where the breakout box is, with the high zone at around 90,900. That's what I would say if you did take that. Pretty interesting price action to move to the north. Really pretty interesting. Okay, let's take a look at oil. Let's go to the F contract. That's Jan. What we can see is price action is fading, right? That's going to bring that gas with it, folks. These guys, they run in tandem. You got to pay attention to that. They do. They run in tandem. So you want to keep an eye on those sorts of things. If that happens to occur, let me see where my actual notes are. See if I'm here in the CL1. Forget. Oh yeah, here we go. So taking a look at the oil contract, we can see we have a little bit of a cross current, but we're still sitting in a great big range event. And that range event gives us a floor at about 58. That also happens to be where the big put wall is. And a ceiling at 60, which is where the big call wall is, but also the 0 DTE call wall. So what do? We went from the top of the box 3 days ago to the bottom of the box. I talked about this early in the week. Bottom of the box, that's going to be the best place for the bounce. Here we are at 68, and then bouncing off of that edge. What's the real storyboard? If the chart has more downside, we are not going to be able to breach $58.68. Okay? If we do breach this, this is the box we are going to move through, right? And that box is about 50 cents wide. So it would put us all the way at the top of the formation at 59.22 if we happen to break out above that edge. What's the trade here? If it is in a bottoming formation where we just chop back and forth, anything pulling back into that $58.30 area, $58.20, that's going to give you a buy zone that you really could walk up. I'm not sure how the Fed meeting is going to affect what's going on here. I really don't. The EIA report is not scheduled to be released. Yes, it is. 10:30 Eastern, forgive me. So that could make a difference. I don't know if it will or not, to be honest. It's in a very messy space. I would wait for the dip back down to the low of the range, or, you know, if it happens to give you a higher low, you can walk that up. Otherwise, I mean, this is a terribly messy chart, and the whole formation is caught in a sideways pressure event. Let's take a look at gold. Gold, also sideways. Here are the three boxes that I am looking at in terms of the rotation. I believe anywhere around 42.12 to 42.17 will be a good long into 42.27, which is where it's sitting right now. Why, Henry? Old resistance. They're going to come in there and chop around. Could it move higher? Of course, right? It could move up into the big fat round number of 430, but 42.27 is where you're going to see your first group of sellers try to come in. The put wall for the 0 DTE is actually at 42.30. So the traders want to get above that zone, but look at the pocket of motion. It's a cesspool. So you either wait for the deep dips and give yourself a go, or you wait for the big spikes and give yourself a go. But right in the middle here, nothing but a scalp. And you can see, look at this, a nice, clean rejection off of this 42.27. It actually came in, kissed the put wall, and immediately rejected. So what are the traders going to do? You know, easily they come back into that 42.17 area. Easily. So I won't trade this because it's very ugly and it opens up too much risk. Where are the walls today? Well, deep put support, 4,175. The big call wall is up at 4,400. The 0 DTE call wall is at 42.65. And as I mentioned, the 0 DTE put wall is right here at 42.30. Price action can go in either space, but because I'm looking at where inventory is being measured, this could be a long if it is a look above and go. or it could be a short if it is a look above and fail, right? And so I'm just going to wait. If I'm trying to trade that, I'm just going to wait until it's in a space where I go, hey, I know if it loses its edge and pops back up, everybody else was buying there, so then I'm going to buy, right? And those are way down at the bottom, 42.17, 42.13. All right, obviously it's going to move with the FOMC meeting, but, you know, it's hard to say how much. All right, so when we take a look at SPY, lastly, this is the one that's sort of going to give us direction about what's happening with price action. Right now, the forward ES contract is priced about, I don't know, 40 or 50 points. Let me see. Hang on a second. I just want to look at the futures contracts here for myself. Okay, the H contract, which is March, is 50 points higher than the current contract. And so we know that they're in a rollover moving forward in time, and it's really hard to say what those contracts are likely going to resolve at. But we can take a clue from here and say, if this falls out of the range, by the time the contract rolls, that gap is going to get much tighter, okay? And so it's going to be, when the gap rolls, we're going to have a short event that will fill that gap. That's just my suspicion based on what the SPY is doing, dropping out of this range underneath, 685. If, per happenstance, it does not do that and it holds 685, that gap might take a little bit longer to fill. Right now, price action has been grinding in a big pocket here with the low at 682-ish and the high at 685, 686, something like that. And so it's about 4 points wide, maybe, right? 3.5 points wide. And so if it gets to the top and breaks out, that's going to give us the 588 area. And then, if we actually have a Santa Claus rally, it will move to the upside. But price action is weak, right? And if this is, I don't trade these, but if this is some kind of ugly head and shoulders pattern, then the neckline, which is, 682 to 688, that's 6 points to the south, and that gives us, 675, which is lower than the current 0 DTE put wall, but much higher than the big put support, which is way down at 670. All right? I don't think this is a head and shoulders pattern. I just think this is a big sideways pocket, and deep dips still going to bring buyers in. If this market starts rolling off a cliff, I do not expect it to continue to roll off a cliff. What I do expect it to do is test the low edges and then recover. That doesn't mean you go catching a falling knife. Let price action tell you that a floor is being made, and then you can move into the trade. All right? You want to be careful, because that's the only way you keep your money in the market, being careful. All right, everyone. I'll see you soon. As you know, this is my last session until next Monday, and I will see you all from Tokyo. Take care.